from the heart of where innovation, money, and power collide. In Silicon Valley and beyond, this is Bloomberg Technology with Emily Chang.
I'm Emily Chang, and welcome to a special edition of Bloomberg Technology. We are coming to you live today from the Goldman Sachs Builders and Innovators Summit in Healdsburg, California, in the heart of Sonoma wine country. This is where Goldman brings together 100-plus entrepreneurs coming from the next generation, emerging companies, along with seasoned executives, and it's back in person for the first time in a long time. This for its 10th annual installment. I just spoke to Goldman CEO David Solomon. Among the speakers here, also former President George W. Bush, the entertainer LL Cool J, and so much more. We have a great show lined up for you. We are going to be joined by Reid Hoffman, of course, the co-founder of LinkedIn, partner at Greylock Partners, as well as Maven Clinic, CEO Kate Ryder, and a number of exciting entrepreneurs. But I want to kick it off with Dan Dees, Goldman Sachs co-head of investment banking. Take a listen.
It's unique to us because this is a conference that really is designed to celebrate, to promote, to foster entrepreneurship and innovation. As you noted, we do dozens of conferences every year, and they tend to be aligned around industries. And you've probably been to some of them, our healthcare conference or internet conference, software conference. This is different in that it's industry agnostic, it's size of company agnostic, and it's just designed to get 100 or so private company founders and CEOs together to talk about the common issues, the common challenges of building a business and best practices around building a business and to build their own networks with each other. And the energy you get when you bring together that group of entrepreneurs in a setting like this for 2 days to talk about those topics is fantastic. I hope and expect you'll get a sense of that today.
You've worked at Goldman since 1992.
That's right.
Travel the world.
Yep.
How has Goldman's approach to tech investing and scouting earlier stage companies in particular changed in that time?
It's changed quite a bit as the whole technology landscape has changed quite a bit. I look back before my time. I've been here forever, as you said, but before my time, we took Microsoft public back in the 80s when it was a $350 million company. I mean, it's kind of amazing to think about the long heritage of what we've done in the technology space. But what changed probably 15 years ago, 10 or 15 years ago, in our approach to the business was we realized these companies were starting small and getting big very, very fast. And we had to go earlier and earlier into their life cycle to start building relationships, because you wanted to be there when they were small and when they quickly grew. And their needs to raise capital and to merge with other companies accelerated up their life cycle too. And so 1 or 2 or 3 years after founding, we were finding that these companies were important companies to us and to our franchise. And so we started doing things like this, throwing conferences for earlier stage companies, and we just started building relationships earlier, working with the VCs and finding our ways out in the communities to meet these companies earlier.
Are there any trends in particular that you're doubling down on and trends you're staying away from, or is it more about the people than the idea?
We're doubling down on everything in technology right now. It's such an exciting time. What an exciting time to be in our business, whether it's to be a journalist to the technology industry or a banker. It's an extraordinary time. We're doubling down on everything. Sure, there are a bunch of trends that are very exciting, and some of them are represented here. All the cutting edge technologies, the companies that will deliver us our future, artificial intelligence companies, augmented reality, quantum compute, synthetic biology, all the things you hear about that are cutting edge technologies, those are exciting to double down on, and we're doing that. But equally, when I think about the activity levels at Goldman, and when I think about the activity levels more broadly in the economy, and when I think about the attendee list at a conference like this, one of the places you're really seeing a lot of the opportunity and seeing a lot of things happening is in the places of overlap between technology industry and traditional industries. So financial services and tech, fintech that everyone talks about, auto tech, industrial tech, real estate tech, healthcare tech. And that's really where a lot of the excitement is and where a lot of the activity is happening. And we, both in these conferences and in our business, are trying to treat technology the way the economy treats technology, which is having it be pervasive in all of our groups and infiltrate every group.
Goldman Sachs co-head of investment banking, Dan Dees there. We're going to have much more of that conversation later this hour. But first, I want to get a check on the markets. Head back to Ed Ludlow in our San Francisco studio. Ed, take it away. What's happening at home base?
Yeah, technology really driving a rebound in U.S. equity markets. You can see the Nasdaq 100 up by 0.8%. Inflation in the latest reading came in a little hotter than expected. Yields fell, and that boosted mega cap tech stocks. The NYSE FANG Plus index, names like Microsoft, Amazon, and Google parent Alphabet higher on Wednesday. That gauge up by 1%. And more modest gains in the semiconductor sector, and cryptocurrencies also higher. The Bloomberg Galaxy Crypto Index up by more than 3% on Wednesday, driven higher by Bitcoin. The other big thing facing the market, of course, is supply chain and price pressures coming from a breakdown in supply chain. President Biden speaking on Wednesday, calling for support for his infrastructure bill as a fix to some of those problems. Take a listen.
This is the first key step toward moving our entire freight, transportation, and logistical supply chain nationwide to a 24/7 system.
Of course, the spot story in supply chains globally is Apple. That breaking news on Tuesday that Apple's trimming its production targets for iPhone by 10 million units because of components constraints. You saw some of Apple's big suppliers in Asia fall on Wednesday. Japan Display gets 54% of its revenue from Apple, down almost 3% in Japanese trading. Some other suppliers also lower. What's really fascinating, if you come back to the next board in US trading, the two companies, the two key suppliers named in that Bloomberg scoop, Broadcom and Texas Instruments, also lower on Wednesday as well. Texas Instruments faring slightly worse, down 0.7%. By the end of trading, Broadcom had pared some of those losses to just 0.1%. It's interesting. What we're seeing across Wall Street is revisions in earnings expectations for the S&P 500. That's what you see on this final board. And it's basically saying that even though yields and rates have been creeping a little higher, we've revised expectations for the third quarter in the IT sector up by 0.3%. Overall, though, expectations are being revised downwards across the S&P 500 by around 0.4% for the third quarter, 0.1% for full year 22. Why? Principally, it's those industries that are most sensitive to those supply constraints and worries by the marketplace about rising costs that might be had to pass on to consumers. Emily.
All right, Ed Ludlow, thanks, sir, for holding down the fort. We'll be back to you later in the show. Okay, coming up, Reid Hoffman. We're going to talk about pandemic investing, the future of transportation, and Facebook with Greylock Partners partner Reid Hoffman, of course, an early investor in Facebook. He's now commenting on Facebook's current controversies. That's up next. This is Bloomberg. Welcome back. I'm Emily Chang. This is Bloomberg Technology from the Goldman Sachs Builders and Innovators Summit in the heart of wine country in Sonoma. My next guest is someone I love speaking to, and it's so great to see you for the first time in 2 years in person. Greylock partner Reid Hoffman, also the co-founder of LinkedIn, to talk about the next generation of entrepreneurs and tech companies. Good to see you.
Awesome to be here.
First of all, thank you for joining us. There are 100 early stage founders at this summit, and you just launched a massive fund, $500 million devoted to seed stage investing specifically, to get to founders even before they get to this stage. What exactly are you looking for, and why are you doubling down on seed?
So when we looked at the market and we said, where are the opportunities in capital? We said, well, our differential advantage is finding that early entrepreneur and building from the earliest stages. And so that's the reason why we said, okay, we need to have a seed fund. We need to go even earlier than Series A to seed, because we ourselves have built businesses. I built LinkedIn, Neil Busry built Workday. There's a whole stack of how do you go from the very first person or 2 or 3 people and then get to massive scale, and that's why we focus there.
What does it say about the future of venture investing? I mean, the fact that it's getting even competitive, super competitive at that level.
So look, I think everyone knows that technology is where the future is. That's why the capital is all going into that, and you see just prodigious amounts of capital being deployed at all stages of technology companies. People say, well, it's a bubble, but it's also clearly the future. And so you have to look for your differential advantages. Ours is that early, couple of founders building into amazing companies.
Now, it's really interesting looking at your portfolio in particular, which 10 years ago you'd look at it and you'd see a lot of consumer social networks. Now you see the transportation networks potentially of the future. Aurora with self-driving cars, Convoy self-driving trucks, Joby electric aircraft, autonomous delivery vehicles with Neuro. What is your overall strategy here?
Well, strategy might be overly generous to the kind of the instincts and the play that you're playing into, but it's I like networks that help redefine our society in ways that make it better off for all of us. It's part of the reason I did LinkedIn. It's part of the reason why I kind of engage in Airbnb as a marketplace, my first Greylock investment. Transport's the same thing. If you actually, in fact, redefine this transportation network, you save huge numbers of lives. We see critical supply chain shortages now because of the working out of the pandemic. Well, if you actually had autonomous vehicles with Aurora, kind of working on that today, that would actually, in fact, make all of our lives better.
So how could the supply chain issues we're feeling now be alleviated if this technology was right now at our fingertips?
Well, among other things, as opposed to waiting for 3 months to have furniture delivered or 6 months to have furniture delivered or having these ships just stocked, waiting outside the port, you would have that delivery happening. And obviously it goes all the way from Aurora working on self-driving trucks, which are present in Texas now, to Neuro, which is a delivery from the grocery store to your doorstep.
Now, how far away is that Jetsons-like future, though, really? I mean, I think we all want to know, when can I do this and when will it be safe?
Well, safety is number 1, number 2, and number 3. They're all very, very focused on safety. I'd say a small number of years. I'd say 2, 3, 4. I mean, it's not only line of sight, it's like not even over the next hill. You can see it.
Is the Jetsons an exaggeration of it, or could that be real?
Well, I think it is becoming real. That's part of Joby, one of them, and the flying cars. Now, the flying cars was not an anti-grav thing. It was 6 props in a quiet, kind of electric vehicle. But I think that kind of transportation revolution that will help all of our lives is in line of sight. Now,
you were one of the earliest investors in Facebook, and I've been dying to ask what you think about the current controversies. You have this whistleblower, Frances Haugen, who has exposed some very uncomfortable truths about research that Facebook did on itself. What's been your reaction to her revelations?
So, good for her for coming forward, good for Facebook for doing the research, bad for not well, you did the research, you discovered some things that were harmful, what are you doing about it? Right? It doesn't matter the fact that you say, well, maybe it's complicated or difficult. It's once you discover something that is really potentially very dangerous and damaging, what we should now hear from the company is, and here's when we saw these reports, here's the stuff we started doing. Here's the way we started making trade-offs against what might otherwise be in our interest, engagement, revenue, whatever, in order to solve these problems. And that's what you want to see from companies in leadership.
So you're disappointed?
I'm disappointed.
Why?
Well, because anything, it's okay to have done the internal research and not reported it. That's okay, because look, this is a problem, we're fixing it. But you then start the work streams to fix it, right? And, so on one hand you say, well, we had these reports in this issue, and what did we do? We disbanded the civics integrity group. You're like, well, that doesn't seem like you're working on it. It doesn't seem like the problem is fixed. So I think it's beholden on business leaders to say, look, when we hit these problems, we work on them. It doesn't mean, look, we didn't know this was going to be a problem. We didn't know it was going to be an issue. It's fair enough, right? And we're just, and by the way, we're following what customers want because they're clicking on things. But wait, there are these consequences, and we should do something about the consequences. It doesn't mean you can solve it perfectly, but you should be working on it.
The research around children is particularly troubling. You have this research that shows that Instagram can be harmful to teenagers, and yet at the same time, you're exploring building social products for kids as young as 5 years old.
Yeah.
What's wrong with that picture? Isn't that a little terrifying?
Well, I think there's a chance where sometimes that product for the 5-year-old is great, right? It could be really educational, learning, engagement, connectivity, but you have to study it and you have to get it right. Like kids, the whole reason we have childhood is we protect them and help them grow into adults. Everyone has a responsibility there.
And at this point, can we trust Facebook to be building the social network for kids? I mean, let's be honest.
Well, I think they have lost trust for good reasons with this, because you're not even responding to this crisis the right way. I think that to regain it, they have to be extra transparent. They have to come forward and say, look, here's our dashboards, here's our metrics, here is the ways that we are trying to work on this and do things. And that's the thing that is incumbent upon them to now start talking. Don't say, oh, we have problems with a whistleblower. Say, here's what we're working on, here's what we're doing, we know this is a problem, we're working on it.
Have you talked to Mark at all, and how do you think he is handling this?
Not yet. I undoubtedly think that they have a whole bunch of internal discussions going on right now, and I wouldn't want to interrupt. I mean, I'm happy to help however I can. I think he's a learner. I have optimism and hope that he will learn from this. I mean, I think his feet being applied to the fire is a good thing in this instance, and then he will go, okay, I now need to make sure that we are being fully investing in protecting children. And I think that's the stance the company needs to be at.
So what is the solution? What is the role for regulation?
So, well, there's regulation, but I think it starts with what's the dashboard that Facebook should be managing towards? So, for example, you say, well, we have an engagement dashboard, we have a sessions dashboard, we have those, great. We should also have other things in that dashboard. We should say, well, look, if it's causing, we know that certain kinds of content is causing body image issues or causing other kinds of things. Well, we should add that to our dashboard, and we should be measuring to make sure that we are having a positive impact there, not a negative. You don't just need one variable. You don't just need well, do they click on it? That's not the only variable. You can put other variables in it. It's part of the reason why you have a large company. And that's the kind of thing that I would want to be hearing from Facebook about, yeah, we got it, and we know what we're working on, and these are some good metrics that we should work towards, and we are going to improve these metrics, and we're going to report on them, at least to our auditors, and we are going to work on this problem.
So here's another way to ask the question. Is Facebook too big to govern and too big to govern itself? If you have a company with even the wisest people in charge, can they really be making decisions about every single moral, ethical, religious, political, legal issue in every single country around the world, in every language?
So,
is that even possible?
Look, it's challenging and it's never going to be perfect. There's always going to be lots of errors. But I do think, I mean, like, for example, one thing, like take, for example, the issues of governance in other languages where you don't have it. We have AI that's getting much, much better on languages. Now, it's not quite there yet, but it's within 2 or 3 years, you suddenly have kind of the equivalent of a universal translator. That will make it easier. That doesn't solve all the issues. There's cultural issues. There's other kinds of things. There's a political revolution here. There's other things going on. But that being said, one of the benefits of having a central service is that you can invest in these kinds of protection mechanisms. You can invest in the AI. You can invest in that dialogue and making it happen. I actually think there are good things about global services as well, where we understand other people.
So you don't necessarily think Facebook should be broken up? I mean, because the proposal has been break up the Instagram, WhatsApp, Facebook, or even break up Facebook India. That should be its own thing.
So I precisely think the wrong answer is break up. Right. It's not to say that there aren't, like, start with accountability, start with transparency, start with the dialogue, what you're doing, see if you need regulation from that point of view. Maybe you need to do a public-private thing, this kind of thing. But breaking up means that you don't have the resources to invest in that centralized thing. Think about it this way. I break it up, and all of a sudden I got lots of 4chans and Reddits and everything else, and it's even more mayhem. So breaking up is not the answer.
Do you think the algorithm is the problem, A, and B, do you think they should be choosing people over profit more often?
So the algorithm is part of the problem, but also can be part of the solution, because of which variables are you maximizing? You're only maximizing engagement, only maximizing sessions, then you're going to have some problems. And that is, to some degree, they may not be doing it for profit reasons, they may be doing it for engagement reasons or strategic, or just like saying, hey, this is what people want, they're clicking on it, that's what they want, hey, they're choosing it. But you should, part of the whole point about exhibiting good governance is to say, yeah, we're going to have lots of engagement, we're going to have lots of people clicking on things, but we're also going to pay attention to good health for them based on the research we're doing.
Would you encourage others at companies, whatever company they are, who might have a problem with what's going on in their company to come forward?
Well, if you don't know what to do, absolutely. You should go talk to people. It's fine. I actually was not dismayed by the fact they did the research and that they were not initially disclosing the research. But then you should start working on it. You should start doing things to solve it. And then, of course, a whistleblower comes forward. So then you should be able to show, like, oh, yeah, we did that research, and here's the stuff we started doing to try to fix it. That's the right response.
So here we are. You are looking for the next generation of big companies, maybe not the next Facebook in this particular moment, but the next big thing. What should be in the entrepreneur's toolkit of today, post-pandemic, that maybe wouldn't be top on your list 10 years ago?
Well, it's always about how do you build that amazing company. One of the reasons why I wrote the book Blitzscaling was not just to demonstrate kind of what does Silicon Valley learn and why do so many of the tech companies of the world come out of Silicon Valley, but also to help those entrepreneurs. So we have a whole chapter on responsible blitzscaling, which is as you multi-thread your organization, hire people who say, okay, where could we possibly do something that would really go wrong, and let's try to prevent it. So you have some people whose jobs that is as you scale to these massive size companies and massive impact in the world. And it's totally doable, and it's doable without slowing down.
All right, Reid Hoffman, we could talk about this for hours. I appreciate you taking the time to join us. We could debate this. We'll debate this offline in the future. Reid Hoffman, partner at Greylock, co-founder of LinkedIn, and always has something wise to say about the way the world is going. So thank you for joining us. Coming up, we're going to be talking about Netflix, a Netflix roundup as one series takes the throne as the streaming service's biggest success ever. Another raising some red flags for being deemed offensive and controversial. We'll bring you the latest on that controversy next. This is Bloomberg. A few stories we're continuing to watch. It is official. Netflix says South Korean show Squid Game has become the biggest series launch ever. The dystopian drama has attracted 111 million viewers since September 17th, surpassing Netflix's previous top show, Bridgerton, which got to 82 million households. That's a big difference. First 28 days after release. And staying with Netflix, employees raised concerns about offensive material in Dave Chappelle's latest comedy special, The Closer, days before its initial release. They warned executives that as a series, jokes about gender-neutral pronouns and sexual jokes about transgender individuals were potentially inflammatory, damaging. Netflix officials decided the show didn't cross those lines. Employees have taken their grievances to internal forums and to Twitter. That's a story we're going to continue to follow. Coming up, we're going to have more from the Goldman Sachs Builders and Innovators Summit from the heart of wine country in Sonoma, California. We're going to hear more from Goldman Sachs co-head of investment banking, Dees, coming off. Also, we'll have exclusive interviews with the CEO of the Maven Clinic and Syndio CEO talking about pay equity, how important that is. You don't want to miss any of those conversations. Coming up, this is Bloomberg. Welcome back. I'm Emily Chang, and this is Bloomberg Technology live from the Goldman Sachs Builders and Innovators Summit in the heart of Sonoma wine country in Healdsburg, California. We've got a new oldest person to go to space now. Star Trek's Captain Kirk, a.k.a. William Shatner, has touched down in Van Horn, Texas. Our Ed Ludlow joins us now with San Francisco for the latest on Blue Origin's mission. Ed, I'm having flashbacks to being in Van Horn and watching Jeff Bezos touch down safely. Sounds like this one went off without a hitch.
Yeah, thankfully he can live long and prosper, forgive the pun. But, you know, it was mission successful. It's the second crewed flight that's gone to plan, as Emily chuckles away. But it was so fascinating because William Shatner was visibly moved after returning back down to Earth. Here's what he had to say.
What you have given me is the most profound experience I can imagine. I'm so filled with emotion about what just happened. It's extraordinary.
I mean, just an astonishing reaction for a man that was such a sci-fi icon in the 60s, a figure of the future of space, and now he's actually lived it, Emily. Astonishing.
Astonishing indeed. Look, they say it's not a competition, but of course it's a competition. I mean, how would you put this Blue Origin mission in the context of what we just saw with SpaceX and Inspiration 4?
Yeah, look, at 62 miles apogee above the Earth, it is a fraction of what SpaceX achieved with the Inspiration 4 mission, right, which was 320-mile orbit. for 3 consecutive days. But this is the business model for Blue Origin. This is what they want to sell. William Shatner was flying for free, of course, paid for by Bezos and Blue Origin, but they want to attract high net worth individuals who are willing to pay for just that few moments of weightlessness in space. And we know from Brad Stone's book, for example, that there's pressure internally in Blue Origin to really ramp up the frequency of launches they're doing.
So we are officially seeing space tourism now in action. What is the future of this? Are there really going to be hundreds of these flights going up and coming down every day?
It's really hard to gauge. You know, Virgin Galactic is now going to charge $450,000 a pop for its launch system for a pretty similar experience. After SpaceX finished the Inspiration 4 mission, they said they were backlogged, basically. They had a list of willing paying customers who wanted that 3-day orbital experience, but they simply couldn't meet the demand. They can only launch a few times a year. UBS reckons this is a $4 billion a year industry by 2030. But until we get some real detail on how much a per-flight cost is or who those buyers actually are, as you know, Emily, we've discussed it, this is a rich man's sport, and right now it's certainly being bankrolled by the billionaires.
All right, Ed Ludlow in San Francisco. Ed, thank you for that update. Glad everyone is happy and safe. I want to get back to our exclusive conversation with Goldman Sachs co-head of investment banking, Dan Dees. I asked him about the number of companies taking the traditional IPO route versus going the SPAC and direct listing way. New phenomenon there. Take a listen to what he had to say.
They're still the minority of the things. More companies are still choosing the traditional path of a traditional IPO. We continue to innovate on the traditional IPO and find new ways to do price discovery around.
Because there are folks who say that traditional path is broken.
Yeah, and I don't believe the traditional path is broken. I think the direct listing path is fantastic for a number of issuers. We've done it, and they've gone extremely well, including the one we just did for Warby Parker and Coinbase and others. I think some SPACs, in certain instances, can be really elegant mechanisms to help get companies public, but equally, I think the traditional IPO, you talk to the companies who've been through it, many of them feel great about it, and feel great about their experience and their process of picking their shareholders and picking their price and launching into the public market. So I don't see that as fundamentally changing.
We seem to be seeing increasing regulatory scrutiny around the world. What does that mean for deals, especially mega deals? Will we see less of them?
I don't know, regulatory scrutiny is increasing, and the tone is definitely, the tone is pretty clear out of regulatory bodies all around the world. Regulatory considerations were always part of the M&A process, and we always had to take that into consideration as we advised companies. You have to think through the way you draw up contracts and the way, the types of transactions that might make sense in this regulatory environment. But equally, again, when you just look at the opportunity, in a regulatory environment that wants to be very pro-competitive and make sure there is plenty of a vibrant competitive ecosystem of companies, there are a lot of M&A deals of smaller companies that come together to be better competitors to the bigger companies, or a medium company that buys a small company to be better competitors to the bigger platform companies. And so there is still an enormous amount of space for a very robust M&A environment. And it's been borne out by the numbers recently in terms of what you've seen on announced deal volume.
The Zoom 5.9 deal, I know Goldman was involved in that, didn't happen.
Yep.
Why didn't it happen? And are we going to see more deals, big deals, potentially die like that?
I don't want to talk about any specific transactions, but will we see more deals die? Yeah, I do think you'll see more deals that get the scrutiny, that come together because they believe in the strategic rationale of coming together, and then for whatever reason, whether it's regulatory scrutiny, and this is not a Zoom 5.9 comment, but more broadly about deals coming under pressure, you will see some. We had the Willis Aon Towers deal from earlier in the year get turned down by regulators. And so you will see some of that. And yet equally, again, the offset to that, just the underpinning, robust nature of what our clients' ambitions are, is helping to offset some of that pushback.
I know you spent time in China, and we're also seeing a regulatory crackdown in China. How do you think that will play out, and what does it mean for U.S. investors in the country? The regulatory pressures in China, it's been fascinating to watch. You also spent time in China, and so we've talked a little bit about this. In some ways, it's not necessarily always different from what we're seeing everywhere else in the world in terms of direction, but sometimes the pace
and the clarity of communication and the dictate that comes leads to faster action and faster changes and faster rebalancings in some of the industries that they are targeting. But we'll see. Again, in China, when I talk to our bankers over there, the underlying level of innovation and creativity and new company formation and optimism, it's easy for us to look over there and say, oh boy, it seems like a pretty tough environment from a tech perspective. The underlying momentum in that business remains extraordinarily high.
There's a war for talent, especially a war for tech talent.
Yes.
Goldman has taken a pretty firm line on employees coming back to the office. Tech companies are being more flexible. Some banks are being more flexible. Are you at all concerned about losing talent in that equation?
Yeah, there's certainly a war for talent, and it's intense, and I think it's a good thing. It's great to see, to see all the demand for talented people. It's a competitive war for talent, so you got to get the package right. You got to, offer them a competitive package. But equally, I find, and this is me extrapolating from a narrow slice, but I find that engineers at the most senior levels are focused not just on the package they get, but equally the mission and the difficulty of the problem they're trying to solve.
That was our exclusive conversation with Goldman Sachs co-head of investment banking, Dees. You can catch that full interview at Bloomberg.com. Coming up, their mission is to help women starting and raising a family, make that easier for us all. The founder and CEO of Maven Clinic joins us next to talk about how she is making that a reality. This is Bloomberg. Welcome back to Bloomberg Technology. I'm Emily Chang, live in Healdsburg, California, coming to you from the Goldman Sachs Builders and Innovators Summit. I am joined now by Kate Ryder. She is the founder and CEO of Maven Clinic, which helps women through their journey of family planning from beginning to end. To date, they have helped more than 10 million women around the world. Kate, it's great to have you back on the show and to see you in person.
Yes.
So it's products like Maven Clinic that enabled us to be home with our families on lockdown for almost 2 years. What's it like to be here in person, networking with entrepreneurs, CEOs, bankers for the first time?
Yeah, thanks so much. Well, it's amazing to be here sitting with you and in the California sun. So it's really inspiring to be back, but I think everyone must kind of miss their family a little because we're all showing each other pictures of our kids right now. I had a kid during the pandemic, so I have a new baby to show pictures of. But no, it's really great, and we just started, so we're here for the next few days.
So speaking of that, childbirth is the most commonly used service in our country, and yet for so many years we haven't invested in it. How is Maven Clinic trying to change that?
Yeah, I think one of the biggest things in healthcare that has never really made sense is if women and families are kind of at the center. Childbirth accounts for 1 out of 4 hospitalizations in the U.S. It accounts for some of the top, one of the biggest life-transforming moments in starting a family and in healthcare, that women and families have never really been at the center of it. And a lot of the care models, they don't include things like mental health or breastfeeding support or pediatric support, all kind of, in one journey and on one platform. And so what Maven's trying to do is really redefine how we think about women's and family health care by adding a lot of these more holistic providers into the care model, and then even areas like fertility, miscarriage, postpartum depression, bringing that to the fore.
We just heard Goldman Dees there talk about how it is a war for talent, and now with people sort of reevaluating their future, where they really want to be, more so now probably than ever. Do you see adding on some of these top tier family benefits? Could that be, kind of where employees draw the line when they make a decision about what they want to do or not? Could it make employers significantly more competitive?
Absolutely. I think we're living through the Great Resignation right now, and so family benefits has been really top of mind. It's been an area that's been underserved for a while, but we've seen an explosion in interest in fertility benefits over the past year, fertility, adoption, surrogacy, and then really kind of bringing new moms back to work, which has always been kind of core in what we do. So many women left the workforce in the last few years that a lot of employers are really focused on that as well.
So many women are also scared to have a baby at work. And I wonder how your platform and these benefits being offered could change that?
Yeah, there's been a lot of people are afraid right now because of vaccine misinformation about things like fertility. Do you start a family now if you're pregnant? So I think that's definitely, we've done a ton of education around that over the last few years with our clients. But I think that coming back to this idea that family is just so important, as we've all been kind of locked in our homes for the last 2 years with each other, I do think we're seeing a baby boom. If there was kind of about a 10 to 15% dip in pregnancies last year, a lot of it's coming back online right now, and fertility as well.
Interesting, because I feel like if you look at the broader stats, the birth rate is actually going down. Is it not?
It was over the last few years, but a lot of people were delaying things. And so now I think what we're hearing from our clients and some of our health plan clients as well that sit on top of all these claims is that things are incredibly busy. And so a lot of those delays they're seeing this year.
So what does that mean in terms of our needs for healthcare, and how will Maven try to meet those needs?
I think it just means that, I think what digital health has done with COVID is it's really shown a new way of delivering more kind of culturally sensitive and holistic care to serve more people. And so I think that, particularly with telemedicine, which is core to Maven's care model and what we do, we're able to reach more people, give them more support, and I think, really helping in this family building journey.
How receptive do you feel mostly male venture capitalists are today to what you're trying to build? Given that for so many years, and it's still happening, women have had trouble getting investments in women and children.
I think it's changed a lot. We have a board of predominantly women, and even in our last fundraise, we just raised $115 million. That was co-led by a female venture capitalist. I think, more generally though, digital health is like going through a huge boom. I think a lot of investors are saying, it's like where fintech was in 2013. And so women control 80% of healthcare decisions. It's like retail. Like if you don't invest in women's and family health, then you're actually not investing in the core consumer at all.
I'm sure you have a position on the Texas abortion law. Thoughts?
Yeah, I think that is, as ACOG and a lot of the medical associations have said, that's doing harm to patients because it's restricting access to care. And so, really proud that our telemedicine platform is able to help people kind of think through a lot of decisions they have to make right now.
So given the political landscape, how important is it for women to have more choices at their fingertips when it comes to their health and their bodies? And how do you see Maven fitting into that?
Well, everything is about access, in my opinion, and Maven, that's our mission, is access for all. And access is not just, it's to in-person providers, but it's also to providers that you trust, who look like you, or, who share who speak your same language, or who are your same race, your same gender. I think that's one of the most powerful things that telemedicine and our platform is doing, is we're connecting patients to providers that they trust, who look like them and share their lived experience, and that and over virtual platforms, so they can talk to people 24/7. And so that is really empowering for patients around figuring out what to do with their health.
All right, Kate Ryder, Maven founder and CEO, great to see you here in person.
Thank you.
Thank you for stopping by, and thank you for joining us.
Thanks so much.
Okay. Coming up, fighting for more equity in the workplace. Talking about that, we are going to be talking to Syndio, a startup which helps companies around the world create a more equitable workplace for all. But how? We'll talk about it with the CEO up next. This is Bloomberg. Welcome back to Bloomberg Technology. I'm Emily Chang, coming to you live from the Goldman Sachs Builders and Innovators Summit in Healdsburg, California. My next guest is Maria Colicurcio. She is the CEO of Syndio, a software company helping companies around the world create a more equitable workplace for all employees. And she's been named by Goldman Sachs Builders and Innovators as one of the 100 most intriguing Entrepreneurs of the Year, which is quite an honor. Maria, thank you so much for joining us. It's great to have you here.
Thank you for having me.
So you make it sound easy. Can software really help us pay everyone fairly?
It actually can. I think that's what's pretty incredible about this phenomenon where we all stand around admiring the problem of pay inequity, because it's solvable, and it's completely solvable right now using technology and innovation.
How? How do you solve that problem?
So it's really pretty simple. So our software enables companies to analyze and resolve pay gaps due to gender, race, ethnicity, or anything that sits at the intersectionality of those things. So if you think about it, Black women, for example, get a double whammy. So they get hit twice. And it's about looking at not just what companies need to pay to fix these pay inequities, but really digging in and understanding what are the underlying policies and behaviors that are driving those disparities and fixing it at the root. And that's where technology can help.
How much progress are you actually seeing?
We're seeing
more broadly.
We're seeing so much. We have approximately 200 clients, and I would say about 65% of them are in the Fortune 2000. So about 10% of the Fortune 200 are using software, our solution, to do this. And they're doing three things when they come out of an engagement with us. They're remediating. So they're paying people that were not getting paid fairly because of something like gender or race. They're fixing their policies and behaviors. So let's say they have a broken pay for performance policy. They're fixing that. So they're coming out of it, addressing the root. And then the third thing is a lot of times they are getting transparent about it. So they're talking to their employees and sometimes even publicly about how they pay, why they pay what they pay, and their commitments around pay equity.
Now, I'm sure there are plenty of executives out there who think they pay their employees fairly. But if they actually looked at the data, they would see the inequities. How common is that? And how big are the gaps that still exist?
It's a great question. And what I always tell companies and leaders especially that are grappling with this is that discretion across large populations favors the majority. So it's likely that if you haven't looked under the hood, you're going to find rust. So be prepared for that. It should come as a relief to you that everybody faces this. But the beautiful thing is once you address it and once you start addressing it in an ongoing way, you can actually scrape off that rust and whittle your remediation, whittle down your issues over time until they're ultimately zero.
And you have to put in that work year after year, right? You can't just do it once and think you're done.
And it's not even year after year. You have to put in the work constantly because if you think about all the things that are happening in a business as they evolve, you're hiring people, you're reorganizing, you're changing merit, you're doing bonus cycles. Every single one of those moments is an opportunity to either get more equitable or less equitable.
Now, there's a big concern about women leaving the workforce in the middle of the pandemic. How concerned are you about that? And how important is pay equity in keeping women in the workforce and getting them to come back?
I think it's really important, and it's not just important for women, but it's important for people of color, and it's also important for white male millennials who are considering themselves real accomplices in this battle for pay equity. And I think pay is just, it's really a proxy for so many different things. If you think about all these commitments around being a diverse, equitable, and inclusive workplace, pay is fundamental to that. So how can you be focused or committed to DEI if you don't know first that you're paying your people fairly without regard to something like gender or race?
You have 7 children. I have 4 children, so I'm in awe. And I guess I'd love to hear what your message is to women out there who think they can't have a family and have a career. And maybe you're not gonna feel that balance ever or all the time, but you know, what kind of wisdom can you share with us?
I think there's a few things. Number one, you have to have a partner that supports you in all that you do and that takes an equitable role at home as well as in terms of the career path. That's something that we see data on over and over again, is that women are carrying a heavier load at home. So find a partner that's going to create a balance at home that enables you both to pursue what you want to pursue. I think the second part is for leaders, looking at the skills that we gain as parents and thinking about those similarly to how we think about veterans. So, for example, Starbucks, a place where I worked for 4 years, we had a veterans hiring initiative, and we would think about what skills did they garner on the battlefield and active duty that we can apply to the corporate workplace. Why aren't we doing the same thing for parents? I mean, you know, there's so much that goes into the emotional coaching, to the juggling, to the staying calm under pressure. I think leaders really need to think about how to apply that to the workforce and think about those as skills that we want.
Susan Wojcicki, the CEO of YouTube, has 5 children and told me that she thinks being a mom makes her a better CEO because she can prioritize better. If something's growing slowly, she's like, I don't have time for it. If it's growing fast, that's where she will invest her time. How do you think being a mom of 7 children makes you a better CEO?
I think it makes me a better leader because I think you come to the table with empathy. You come to the table with so much humility. I mean, how many times have your kids taught you a lesson about you think you're being really strong or assertive and they put you in your place real quick? And I also think the third thing is it's taught me collaboration, and it's taught me the lesson that I think David Solomon is teaching us here, that when you bring people together from diverse backgrounds, you get more innovation, you get better ideas. And you certainly see that with kids because they all have such different characteristics and traits and ideas and personalities.
All right, Maria, that was fascinating. Thank you so much for joining us. I recently spoke with Steph Curry, who I know is one of your investors, super excited about the product, and obviously a really, really important cause. So thank you so much. Syndio CEO Maria Colacarcio.
Thank you so much.
All right, that does it for this edition of Bloomberg Technology, coming to you live from the Goldman Sachs Builders and Innovators Summit in Healdsburg, California. We've had a wonderful time here. Make sure you tune in tomorrow. We're going to hear from Clubhouse CEO and co-founder Paul Davison. I'm going to be speaking with him right here in a little bit. I'm Emily Chang. This is Bloomberg.